right, welcome back to Stacked. My name is Jeroen. I'm here with my co-host Mikkel, and today we welcome Matt from Art. Hello, Matt. How are you today?
Doing great. How's it going, guys?
Very good, very good. We're very glad to have you here. Excited to talk to you, get to know a little bit more about you and about. Is it Arc or Arch? How do I pronounce it?
It's Arch Network, so
Arch
Arch.
Network, Arch
Yeah.
Network, great start. All right, Arch Network. So yeah, let's dive straight in. Look, Matt, can you tell us a little bit more about like yourself? How you maybe the standard question? How did you end up in crypto? What are you doing in this industry?
Yeah, so I've been in crypto quite a long time. Have a lot of built up scar tissue and battle wounds to show for it. I've been technically in Bitcoin since 2012 when I was mining Bitcoin in my college dorm room, taking advantage of the free electricity. And I think I had a friend at the time that told me Bitcoin would be worth $100,000 one day. And at the time it was like $6 or $7 or something. So I'm like, this is definitely something I want to learn about. So I dove in. I wanted to learn as much as I could, and that led me to first mining, and even kind of did some day trading back in the Bit Instant days where I was like day trading 20 coins at a time just to try to clip like $50, on the volatility and stuff, which was kind of interesting. And then that kind of led me to uh, the next wave of crypto, which was the ICO days of 2017, which I thought that was pretty interesting, where you could have all these distributed type of applications and these novel ideas and use cases for blockchain technology. Of course, they were all just kind of ideas at that point, nothing really able to be executed on. Lots of nascent technology that needed to be tooling and infrastructure needed to be improved, and that brought us to 2020, right? Like DeFi summer and NFTs, and finally kind of the culmination of a lot of these gaming chains that were purely ideological back in 2017 in the ICO days. um, I finally got to see some of those products brought to market, and these DeFi concepts like MakerDAO uh, and Curve and Aave, Uniswap, et cetera, kind of came to the forefront, which made finally something to do. You're farming for yield. You're playing with smart contracts. It was there was finally something fun to do in crypto, and I thought that that was kind of my big moment of diving into the ecosystem and participating as more than just a passive investor, actually diving into the world of NFTs and being a part of various communities like Bored Ape Yacht Club. And in that process, of course, I've learned every cycle we've learned something and kind of add another notch to your belt, so that there's certain things that you could pick up on in future cycles, right? So we can always draw comparisons from previous cycles. And I think that that is what makes the building in Bitcoin thing so exciting right now. Is we saw, all of us saw this wave happening early last year, 2023, with ordinals, and when it came to be, it was like this. Wow, there's this NFTs on Bitcoin. There's some forms of programmability on Bitcoin. We had BRC20s come to be, and via the Taproot upgrade and of course ordinals of last year, finally it dawned on myself and my co-founder Amin that programmability on Bitcoin, which has been mostly lacking, for all intents and purposes over the last 10 to 15 years, mostly because of an intentional design choice by Bitcoin itself, right, to prioritize security over programmability. But now we've actually have a way to do this programmability thing, bring smart contract like type functionality to Bitcoin, where there's so much more liquidity, so much more like brand security as well, that people are comfortable with and have been pitched this concept of internet magic money over the last 3 cycles, right? So uh, I think that that was kind of like this big aha moment. It was like, wow, this is like 2017 all over again, when Ethereum came to be, and there's this huge gold rush of trying to figure out who's going to be the next Aave, who's going to be the next Uniswap, who's going to be the next Curve. But all of that requires a certain level of infrastructure and tooling, like I mentioned before, that was very much missing in 2017 for those ecosystems. So I think right now we're in that kind of critical phase where those tooling and infrastructure is actually being developed and built, so that the next wave of blue chip applications and protocols can exist on the most valuable chain. So I think that's where we're at today.
Awesome, awesome introduction. And honestly, it's always very, very interesting to meet people who've been in the space for that long. Um, one question I have, like before we actually really dive into the details and of Arch Network is you've been in the space for over 10 years. Was there any moment where you said, "Look, I'm done with this. Like I've had it. I wanna get out. I'm done." Or is
I
it
think
just
in every single cycle, there's been that big drop off, right? Like there's this euphoric bull cycle phase where, like in 2017, those I think it was like Q4, you know, tokens were going crazy. There's so many that you can mention: IOTA, Deep Brain Chain. Of course, the Filecoin, Ethereum ones were the most successful and still here. But at that time, chasing these 30x returns and actually achieving that was something that was definitely possible, if not likely, in that phase. And then if you were, like me, and you continued to invest in the space and diversify into other projects that you found to be interesting, you pretty much got crushed in Q1 of 2018, right? So like I think that everybody that has been a part of any cycle in recent history, they have a similar story where they had an expensive learning lesson, and that's going to be no different here, right? We have this meme coin craze on Solana. Like, what could go wrong there, right? People making massive amounts of money, but also losing a lot of money. So I think that round tripping Bored Ape, of course. Like at one point, I think I could have sold my OG ape for like $450,000, but now all of a sudden, like now, of course, it makes sense. Like I feel like totally socially engineered. When Eminem and Justin Bieber all rocking these PFPs and you're getting hundreds of thousands of dollars worth of airdrops, you're like, why would I ever leave? But that's exactly when you should probably sell, when there's sort of that peak FOMO. And these are the sort of tidbits that you pick up and become more experienced with in crypto. So yeah, I think it's pretty frustrating that you leave a lot of money on the table, but at the same time, you're smarter for it. And hopefully you can take advantage of future cycles, uh, recognizing these pitfalls and not necessarily falling into that trap.
Wonderful, wonderful. And do you think it's the time to sell right now, Matt, or
No, no, no. I asked you on stage actually in Brussels. I said
I know.
100,000 Bitcoin by end of year. I'm in the camp that I think we can do it. I think if we can unlock this programmability and smart contract type of ecosystem that exists in Ethereum and Solana on Bitcoin, where there's so much more liquidity that can be tapped into. And I think that that's an extremely bullish case for Bitcoin as a whole, because look at what happened in Ethereum, right? It was, $20 in 2017, and then at peak in 2020, we're up to $4,000. That's a direct result of programmability, smart contracts, actual decentralized applications that can build on top of the EVM, right? So I think that's what the biggest opportunity of this cycle, and possibly even the next one, is: how can we bring the necessary infrastructure to bring that same dynamic to Bitcoin, where there is 5 times more liquidity than there is on Ethereum, and 16 times more liquidity than there is on Solana, right? These are the things that I think about, and I think that these predictions that Kathy Wood and some other of these like more bullish on Bitcoin type of investors put out there, like 200,000, 250,000, $1 million Bitcoin. It certainly sounds like it's like somewhat realistic or possible when we're talking about it from that point of view. The difference between Ethereum in 2017 to a fully mature programmable ecosystem in 2020. That's a 20x or 200x actual like come up on the Ethereum market cap. So I think that Bitcoin doing a 4x is certainly plausible when it comes to unlocking liquid staking, DEXs, stable coins, all that kind of stuff that doesn't exist today on Bitcoin.
Very interesting. I think price wise, I mean, I don't know, man. Like, I think right now seems like it's gonna be an ETH run up, right? Like when the markets turn around. Obviously, I'm not a financial expert, to make these predictions, but looking at how things usually have played out in the past, you always see, BTC, then you see, but it could be different this time. You never know, right? So I think with the ETH ETF, you could see ETH run up. You could see alts run up after that, and then BTC takes another shot at it. That's why I said no to the question you asked me, whether BTC hits 100K this year. I don't think so. Next year most likely will, but not maybe this year. But again, I don't want to put that out there as what I stand for.
Yeah, look, NFA, not financial advice to anyone listening, of course, but I'm certainly in the optimistic camp where I know what we've got cooking and I know who's building on top of Bitcoin right now, and I think that anybody who also shared the same sort of vantage point would be pretty bullish on Bitcoin. So whether it happens in November, December, or June of next year, it doesn't really matter. Everyone's got to be excited about what's about to occur in this ecosystem, and it's not just be excited for Bitcoin, right? Like historically, as you mentioned, Bitcoin leads the way. Like there's always been about 50 to 55% of the total crypto market cap living in Bitcoin. So I think that if Bitcoin goes up, everything else kind of goes up with it because the money rotates throughout the ecosystem, and maybe it's going to rotate out of some of these other more programmable chains and into Bitcoin, which is certainly going to pump its price a little bit. But who knows what's going to happen? But I'm definitely going to be watching and very closely to see what happens.
Nice. That's amazing. Since you mentioned you have this vantage point of seeing what everybody's building, what you are building. Let's talk about what you are building right now. So tell us a little bit about Arch Network. What is Arch Network? What do you guys do? Who you cater to? Everything.
Yeah. So as of now, we're branding ourselves as the only Bitcoin native application platform on Bitcoin. And we say Bitcoin native very specifically because there's lots of other application protocols, meta protocols. Layer twos are certainly the hot topic right now because as I said before, Bitcoin does not have programmability. It does not have a virtual machine capable of executing Turing complete smart contracts. So it is the thoughts of one camp that we use the EVM to scale Bitcoin because the EVM is certainly programmable. But when I say Bitcoin native, we mean that, meaning that an EVM compatible layer 2 chain is not Bitcoin native. It's still Ethereum at the end of the day, and you have to bridge your Bitcoin over to that chain in order to get the programmability that you're looking for in that particular case. So we are essentially bringing and building what Bitcoin is lacking, which is a native VM that can process the execution, doing state changes and asset transfers that constitute a Turing complete smart contract. And of course, there's some necessary pieces to that whole puzzle and dilemma because Bitcoin does not have a Turing complete programming language. It doesn't have the ability to process ZK proofs and these other forms of crypto technologies that exist in other ecosystems where there is more programmability. So we have to bring a couple of these core components to this stack that ultimately allows for this to happen. And essentially the way it works is that you have this specialized ZK VM that essentially are doing the state changes and asset transfers, the computation of the smart contract, simply put. And this is happening off chain because, as I said before, Bitcoin does not possess the ability to do ZK proofs. It doesn't have the ability to do state changes and asset transfers like in the context of a smart contract. So what we also have in addition to this ZK VM is a proof of stake verifier network, which are these validator nodes who are doing one thing, just basically validating the proofs that are generated by that VM that basically bring that transaction or that execution that happened off chain and bring it back on chain. And we're settling every single transaction on Bitcoin, which is a very key distinction versus other layer twos who are rolling up this data and compressing it into one batched file, which they will eventually settle back on Bitcoin. So every single smart contract settling on Bitcoin makes it more native to Bitcoin in the sense that the state is ultimately going to live on Bitcoin as opposed to living inside the Arch VM or BitVM or the layer 2, which is managed by the EVM. So that's the key difference. The other key difference is we can invoke this smart contract with a layer 1 Bitcoin transaction. It doesn't matter what wallet you have, whether it's Magic Eden, Xverse, Unisat, etc., Leather. You call the smart contract with just a layer 1 Bitcoin transaction, and we're able to extract all the information that we need for execution. So there's no need for actually bridging. You can tap into the native liquidity that sits on Bitcoin's layer 1, which is a huge advantage for the developer community because the other option is you have to wait for that liquidity to be bridged over to this side chain or destination chain. So for the most part, developers want to build where the liquidity already is, right? That's for sure. So that's ultimately what we represent to the core developer community who want to build protocols and applications on Bitcoin. Is we actually have the ability to tap into that native liquidity because we're not forcing users to bridge to this layer 2 first. So in a way, that's why we are more Bitcoin native as opposed to bringing like these scalability type of solutions before programmability exists. We think programmability first needs to be unlocked on Bitcoin before we can actually talk about scalability.
I think that's a very good point. So you first solve the problem of programmability, only then would you have, really have a go at solving scalability issues. Actually, something that you mentioned and just thinking about, so you said a key differentiator between Arch network and everybody else is that you have a verifier network that verifies all the transactions that happen and take it on chain and settle it on the Bitcoin network, which is not how most rollups operate, right? Like you said, they batch it into a block and compress those transactions, send it over to the main chain to settle. Why this difference, and what does it even achieve? Like, is it something like, if I were building a BTC L2 that did not have a verifier network settling every transaction, what trade-offs am I taking here, and why would I even consider settling every transaction on the Bitcoin network?
I think that the trade-offs are this, like for let's talk about the negative trade-offs first, which are pretty obvious. Like number one, we're completely imposed and restricted by Bitcoin's block times, right? So we can't do anything about shortening finality less than 10 minutes because if every single transaction is settling on Bitcoin, we have to wait for the block to settle on Bitcoin. It takes 10 minutes. So we can't do anything about that. That's a downside. Another downside is the fees, right? The fees for settling that transaction on Bitcoin cost money, cost a lot more than the computational resources needed to just do state-only execution on a layer 2. So you have to pay for the Bitcoin fees. So depending on the use case that we're talking about as as an application developer, you may not be restricted on just those features alone, right? So like a perp dex is a perfect example. Very difficult to build a perp dex with 10-minute finality, right? You need very, very fast throughput, low latency type of infrastructure. So in most cases, perp dex would not be the one to use this, settle on Bitcoin every single transaction. In which case, like I mentioned before, we are going to address scalability second. But first, we're focused on unlocking programmability. And there's a lot of use cases out there that don't exactly mind the 10-minute finality. A good example is Liquidium, right? They're currently doing layer 1 borrow lend application against ordinals and soon to be runes. Like the 10-minute finality doesn't exactly preclude them from engaging in DeFi on Bitcoin. And you can look at their analytics compared to other DeFi applications on Stacks and Merlin and Bob, for example, and their stats are eclipsing all those other DeFi applications. Why? Because there's much more liquidity that they can actually tap into. There's more assets via these ordinals on the layer 1 that they can ultimately leverage to use in DeFi. So that's the dynamic that Liquidium cared about more so than the 10-minute block times. And there's going to be a whole bunch of developers who feel the same way, where they're okay with the 10-minute block times versus another side of things where you it's a non-starter for them, like the perp dexes, like launch pads, like the pump.fun type of concept. You need a certain high throughput type of chain in order to build that. So that is the disadvantages of settling on Bitcoin every single transaction. The advantage is you're not trusting anybody, any multi-sig, any layer 2 bridge operator or anything. Once the state is stored on Bitcoin, it's done. Like you are now secured by proof of work and the security that is brought with the Bitcoin ecosystem. So the less time you have to worry about worrying about the security of the state of your assets, I think is the advantage of settling on Bitcoin instantly. There are much less trust assumptions engaged in when you're settling on Bitcoin every single transaction, which is another advantage of being more native to the layer 1 is we have this ability to do that. So we don't really view it as a limitation as much as it is something that should be valued, right? Because virtually all other layer twos are asking you to make multiple trust assumptions whenever engaging with a particular application. First, you're trusting a bridge operator to get your Bitcoin down to that layer two. Then you're trusting that layer two altogether, which depending on their design and the choices that they've made could be as centralized as a multi-sig with 5 guys in an office holding the keys, or something as as novel as Stacks validator network, which they've gone through great lengths to decentralize that in a proper manner. So I think that it's going to be up to the applications, the community, a couple other KOLs to really educate the user on these various trust assumptions and critical design choices that are being made by the infrastructure level, so that they can ultimately understand, not just from a user experience standpoint, but also who are they trusting and how long are they trusting them for, what are the attack vectors, etc. So for us, it was just about bringing in the least amount of attack vectors and least amount of trust assumptions needed in order to engage in DeFi. And then like I said, we'll worry about scalability secondary to that. But we certainly have a lot of developer interest who are interested in that piece on its own, whether it's someone trying to straddle both L1 and L2 and have kind of both offerings, and some that are just saying, look, this is exactly how we want it to do. We don't want to do layer two. We want to do only layer one. So we're working with both types of developers right now.
Very interesting. Yeah. How expensive is it in terms of the cost difference of settling every transaction versus compressed blocks?
It really depends on the nature of the smart contract, how much data is being transacted back and forth in UTXOs. But if I've signed loans on Liquidium a few times, and I've seen it as low as $5, as high as $20. So I would say that it's going to be fairly familiar to, I think, Ethereum gas, especially when they have sort of some congestion. We're going to see that probably increase quite a bit. But we'll be monitoring this, and we'll also have a future roadmap item that addresses this issue as well.
What do you think the impact is on actually the Bitcoin chain if projects like Arch Network and potentially some others with similar objectives kind of reach their goals in terms of user adoption, settling so many transactions on Bitcoin? Obviously, I think we all want Bitcoin to be sustainable in the long run when mining or the block rewards kind of go down, right? But what's your vision here? Until what point can you kind of keep growing this without hurting the chain? And then, as you mentioned, congestion, things like that.
Yeah, I think first and foremost, when we scale the security budget of Bitcoin, that makes Bitcoin go up, right? So I think the more bearish case for Bitcoin is taking fees away from the miners, and which is essentially what you're doing when you traverse this activity over to the EVM, right? And I understand a lot of these EVM compatible layer twos are just temporary rollups that are just waiting for a BitVM to happen, which is totally fine. But just talking about the current status quo in terms of how this adds value to the ecosystem, you want that value to accrue to the miners, because that's what ultimately continues to secure the network for the long term. It makes the price go up, which as we mentioned before, has ripple effects to other ecosystems like Ethereum and Solana, which pretty much follow Bitcoin. So I would say that what's actually good for Bitcoin is having a lot of these smart contracts being signed on the layer one, where we're driving continued fees back to the miners. Of course, that's not scalable for everybody because there's only 4 megabytes in a block. So eventually we're going to be all fighting for some block space, and there's only so much good you can do with 4 megabytes, right? So eventually we're going to have to worry about the scalability and ways that we can actually get more performance and get more transactions than what one block will ultimately allow. However, I think that just first priority is make sure that the miners are taken care of. They need to make money. They need to continue to be profitable. Otherwise, it's very, very bad situation for crypto as a whole. And our design ultimately drives the most amount of rewards back to the miners that you could possibly get, because as I mentioned, we're not compressing that data, we're not rolling it up. Every single transaction is signed and executed on Bitcoin and settled on Bitcoin. So there are the most amount of fees that can be attributed back to those miners. That being said, there are going to be other ways of driving reward back to the miners by doing these roll up type of more scalable execution environments, which we're also looking at as well for the future. We're basically rebuilding the SVM in terms of its stack and performance and parallel execution, independent states, etc., so that we can ultimately bring this state-only execution, we'll call it, but sort of layer 2 performance on the same VM instance that we're doing the layer 1 smart contract. So ultimately, the developers will have the optionality of choosing, do I want to settle on Bitcoin every transaction, or do I want the state managed by the VM and verifier network, which is more familiar to a layer 2, but certainly will be Solana type performance, Solana type fees. You don't necessarily have the limitations that you would have if you were trying to settle back on Bitcoin every single transaction. So this is on the roadmap. It's something that we don't really talk about that much because we don't want to confuse people too much. We want everyone to understand that the state changes and asset transfers of the Arch VM and verifier network are happening on the layer 1. There's no new asset being minted on a destination chain through a bridge or anything like that. And that will be the case until we successfully scale both the economic security and the trust in the verifier network and VM to the point where now we can say, okay, we're ready for scalability and performance. This is how it will work. And at that point, since we're Rust and virtually the same exact stack as Solana, we'll be able to port programs over from the Solana ecosystem in the exact same way that EVM compatible L2s are able to port over their Ethereum protocols and smart contracts. So it's just a little bit of some future alpha, and to share with you how we're viewing this scalability solution. But it's very much the same theme as before. We're laser focused on doing one thing, unlocking programmability on the layer 1, and then we'll worry about performance, fees, scalability, all that secondary to that. But you have to bring what Bitcoin is missing first, which is native VM capable of doing Turing complete smart contracts and a resulting verifier network that keeps that VM secure, since there's no way to actually do programmability on Bitcoin yet without any type of soft fork. So if Opcat happens, then that will change, and we'll of course utilize that within the context of our VM. But until then, this is the best implementation and the best design that we could come up with to bring that programmability in a native type of way to Bitcoin.
Got it. I love it. It's like what do I call it? Like grounds up type of building a solution. It seems like you're not here for the quick wins, because it would probably be easier to go for the quick wins, something that's easier to attract users, like on a layer 2 where fees are low, where everything is quick. Seems like you're here for the true tech and for the solution that Bitcoin actually needs.
That's right.
It's
Yeah.
nice. It's nice to see that.
Taking the longer approach, I mean, whether you're building a community or a technology, I think is probably what is better for a lasting contribution to the space. And there's a lot of different implementations and ideas on how to go about this strategy. And I think you have optimistic type of setups. You have tier 2 type of ZK verification, which is like one step above optimistic, which uses some elements of verification on top of the optimistic one of n assumption that is made. And then of course you have sort of this validity type of setup, which is the hardest implementation, and that's what we went with. We went with the absolute hardest and most secure way of reaching consensus and proving that things happened securely. And like you said, I think for us, this is a multi-cycle play. This is certainly not how do we capture the momentum from of this wave. It's all about how do we build what is going to be the answer to that future problem 3-4 years from now. So but make no mistake, like we're bringing this to market this year. It's not going to take years to build. We've been working on this with our team for a while, but our public testnet is going live this month. Public mainnet, if all goes well, probably end of August. And then proof of stake goes live probably September, October. So, we are we're making a lot of headway, and even though it is the harder route to go, and certainly that can be seen with like some other implementations are live today. They've been live on testnet. Some of them are live on mainnet today. Most of them are sort of this EVM type of compatible one, which in our opinion is the easier implementation, but also going to be much harder to get the meaningful amount of liquidity to bridge to those ecosystems. So, might take us a little bit longer to build the harder implementation, but I think that once we build the right implementation, it's going to be very easy to tap into that native liquidity, and you're going to see a lot of liquidity that is being utilized in this new programmable environment, getting yield and doing staking and other things like that.
Really interesting. Matt, actually, I was smiling right now because I really like the way you say some things, right? You said, make no mistake, this is all gonna go live this year. It's not gonna take years to build. I love that actually, because it's like people think this is gonna take years to build. I genuinely believe real builders build in much shorter durations compared to people who say building. It's like, I don't know, man, like, I very, like, some days I wake up and I feel Elon Musk is a genius because he wants to take us to Mars, and then some days I wake up and I'm like, that sounds very scammy. Like, is that ever
Maybe
gonna
in
happen?
30 years, like it's the tricky thing as a visionary, being able to balance what's like actually possible and doable today versus being able to constantly stay ahead of the curve, right? Because that's what is required of these creative minds like Elon or other very great minds in our space. Maybe Vitalik, for example, he's constantly thinking about ways to improve the Ethereum ecosystem while also having to maintain the problems of today. So we're very much taking a similar approach. Like, Amin, he spends half of his time on research of all these different cryptography and various technologies in ZK so that we can constantly iterate, our way of thinking of this is not necessarily how it's going to be tomorrow or today, but it's how it's going to be in a year from now. And that's how you have to build for something like this. Is you can't just take what's available right this second just because it's convenient. You have to actually look at the problem and think critically about what's lacking, what does it need, and what technology exists that can solve this issue. And I think to your point, we can look at other ecosystems and learn from that and compress the development timeline so much because of everything that we've learned. There are lots of people that ran through the wall or in the Ethereum ecosystem back in the 2020 cycle, like the ohms of the world, and we got a front row seat into like what works and what clearly doesn't work. So not just us with Arch and infrastructure, but also protocols like yourselves at pStake to kind of refine your whole design strategy when it comes to liquid staking. I think that is it's a benefit for us. We get to learn from these big multi-billion-dollar protocols that either made a mistake and fixed it or made a mistake and died. But either way, that we're learning from it, and in a much similar way that we're doing that with the infrastructure component. We've learned, from thresholded signature schemes, what are the good implementations, like Frost, for example. Like I think that Amin is very in touch with, which technologies are available and which ones are lacking and it needs to be improved upon. Proof of stake is something that has been around for, I don't know, 6-7 years now, and it's today is in a way different state than it was 7 years ago. So yeah, I think that there's a lot to be desired in the Bitcoin ecosystem, but we also have a lot to draw from in terms of experience and what we've learned in terms of working and not working. So we're taking a very similar approach, and not necessarily just throwing stuff at the wall and seeing what sticks, but definitely, like, I don't think we need to convince somebody that proof of stake actually works because it's currently working in other ecosystems, right? So like if we can utilize that feature to secure a a VM that is badly needed in a chain that has over $1 trillion waiting to do something with it, we're slowly starting to bring the necessary pieces and components to bring that future to be a reality. So that's kind of how we're addressing it, not really imposing the baggage that we've learned or gathered from other ecosystems, but kind of just like bringing what it's lacking.
Yeah, makes sense. I think since you mentioned it's like you learn a bunch of things, you pick some, you discard some, and you kind of build what's the most relevant in today's context, plus also just about, capable enough for you to keep building on top of it. It's not like you build something, you create like a bunch of tech debt, and then no, you have to rebuild everything from scratch again. So very interesting choice that you've made is going with an SVM instead of EVM. I think like I personally am, not, I've never been bullish on the EVM since I would say since what 2020, early 21, I would say, since we've started seeing all these hacks. EVM obviously is the most, is the easiest language to, is the easiest VM to work with for a bunch of Solidity devs, right? You just have, there's so much content out there, it's so easy to learn, it's so easy to pick up. You tell a smart dev to to pick up Solidity, he's gonna do it, he or she's gonna do it in like less than a month, very well, right? SVM is very different. Rust is very different. Rust is more complex to understand. So very interesting choice for Arch to be like using SVM. So just wanted to hear a little bit about that from you. Why that choice? What's the big difference between SVM EVM? Is that part of like the reason why you choose to do this is because, is it like more of a go to market thing where you want to get Solana dApps on your chain? What is the thought process? Just walk us through it.
Yes, so Rust is certainly more like secure and expressive to the point where like and certainly more useful for Bitcoin. JavaScript and being the main programming language over on Ethereum with Solidity for the smart contracts is kind of the stack that developers go to. Whereas on Solana, it's much more Rust native and their specific programming language that Solana came up with. So I think for the UTXO model and Bitcoin specifically, Rust makes a lot more sense. In terms of the actual like design choice of the VM itself, we're not like copying or forking the SVM by any means. We're just inspired by the SVM in the sense that we have independent states, we have parallel execution. We're utilizing. Oh, by the way, parallel execution is obviously here to stay. Like you have a lot of parallelized EVM plays now with like Say and Monad. So I think that Ethereum got it right when they decided to move away from sequential execution and global state, and bringing sea level into the mix, being able to do parallel execution, which is where the performance really comes from in the independent states, so it can be run in parallel. So I think that we're very inspired by that, and it's when it comes to just being more Bitcoin native, these choices were very explicitly made for more compatibility within the context of layer one Bitcoin transactions. So that's ultimately why. Would it be nice for us to be super compatible with Solidity smart contracts? I think it would, because I think we've seen a lot of Solidity devs and Ethereum protocol devs and projects start to onboard into these EVM compatible layer twos. We would love to be the beneficiary of that frictionless process, but at the end of the day, we're going for what's going to be more compatible to Bitcoin Core on the base layer versus trying to accommodate lack of friction for the developer onboarding experience. We'll certainly be attacking making that onboarding and dev experience as simple as possible, with guides and DevRel and tutorials and documentation that can help the developer deploy whatever he wants to deploy, or possibly convert their Solidity smart contract over to a Rust one. But these things are just going to be the growing pains of dealing with Bitcoin, versus trying to impose the way of doing the EVM on Bitcoin and then having to force the user to end up bridging their asset to that more compatible EVM app. So it's just I think it's kind of this chicken and egg problem. Like, do we want to bring the developers first and liquidity second, or do we want to have the liquidity ready to do it and then force the developers to learn this new programming language and way of doing things? So we're opting for the latter.
Got it. That makes sense. When we look at like your vision for BTCfi, Bitcoin DeFi, as we call it, how do you see that play out? Is it like an exact copy of what's happening on Ethereum? Is there going to be more innovation? What about fragmentation as well? Like looking at all these different L2s, maybe even like different VMs, as far as I understand, competing VMs. Like, what's that gonna do to like fragmentation away? And like, what's your overall like longer term vision on this on BTCfi? Like, how is it gonna look like high level from your perspective?
I mean, I'm a firm believer in like there's nothing new under the sun. So I think we're gonna see a lot of the same stuff that was built in Ethereum over in Bitcoin. Not that it's not net new. It is net new in the sense that this is now able to be utilized within the $1 trillion Bitcoin ecosystem. So that of course is new. But all of the ideas that were created with programmability as a reality in Ethereum are going to get tried in Bitcoin, whether by the same exact protocol or someone that's inspired by that protocol. I think that that's what you're going to see in Bitcoin, and that's a good thing. When it comes to state fragmentation, liquidity fragmentation, this is a feature of this whole modularity thing, right? Like we're seeing this play out on Ethereum right now. You've got hundreds of layer twos all fragmenting that liquidity, which isn't necessarily a good thing. But I think I can't remember who it was from our panel, but in Brussels, but someone said, I guess liquidity fragmentation is better than like dormant liquidity. So we're taking it one step at a time. We would rather this Bitcoin be used for something. We are very much against all this redundant architecture. Like I don't think we're going to need 30 verifier networks that are needed to secure 30 different meta protocols. Like it's certainly possible to build a meta protocol leveraging one of the leading verifier networks that are getting a lot of proof of stake economic security staked into it, like Arch or like Babylon, for example. So we are paying attention to this fragmentation problem. I think there's a lot of teams that are focused on solving this issue with these like messaging protocols or these interoperability layers type of thing. So that should help a little bit. But the way I see it playing out is I think that these hundreds of layer twos are really going to consolidate into maybe like 5 to 10 layer twos, much like we have in Ethereum, where majority of that TVL and activity is concentrated in the top 5, like Base, Arbitrum, Optimism, Blast, etc. So I think you'll see something very similar here play out on Bitcoin, and the majority of the liquidity will stay sticky to the layer 1, where they have the absolute most security and least trust assumptions engaged in.
Nice. I can align with that vision. It's makes a lot of sense. Um, I, I looked up a little bit more about Arch like before the podcast as well. I saw you guys raised quite a bit of money as well. Like you're backed by Multicoin capital. Um, what does this raise kind of mean for you? Like, does it allow you to kind of move faster? Does it like what does it open in terms of like in terms of doors for you guys? And maybe we can even look a little bit further. Like, what are the main initiatives that you have ongoing at the moment? Yeah, to kind of grow and get adoption.
Yeah, certainly that seed round helped us beef up our engineering resources and team so that we can ship our test net a lot faster. We've been laser focused on doing just that, not really spreading our resources or attention on anything else. There's a lot of things that we could be doing, like roll up as a service, as it seems to be a trend right now, or possibly supporting other layer twos to actually allow them to build on top of our VM. But this would require us kind of spreading our attention to a different a different thing. So we've been laser focused on just shipping our test net. We're up to 13 engineers now, all spread around Europe, Africa, as well as US, and some in the UK. So that's what the money allowed us to do. But I think that more than anything, the investors that we were able to attract into this opportunity all are these top-notch signal carrying strategic investors that all want to add value in their own type of way. Some of them are more native to Solana, like Multicoin and Big Brain Holdings are, who have their own relationships within the Solana ecosystem that are certainly very helpful. But more than anything else, I think that them just basically saying like, we trust this implementation, we believe in this design choice, and we have conviction for this problem that the Arch team is trying to solve. I think that's what gave us the kind of the powder or the ammunition in order to go to market and say, look, like, we're not just coming here with ideas, we're actually building them. This isn't like a concept born in academia. This was probably born in Amin's brain, and then we kind of workshopped it with Kyle and Vishal from Multicoin, and I think they decided that this was the coolest thing that they'd seen in the Bitcoin ecosystem so far, and that's what really kind of fueled us, that conviction, to bring it to the next level. So we're extremely grateful for the support and conviction that these investors that we've been working with so far have been bringing. And we're going to be doing our Series A and announcing that here pretty soon, actually. Speaking with lead candidates now, it's going to be very it's going to be very quick, probably, simply because there's a lot of interest to get ahead of this before we launch our testnet and of course mainnet. So we're looking forward to getting some other very, very strategic and value add investors who also have the same vision as us kind of play a part. So yeah, that's where we're at today, but certainly not where we're going to end up.
Awesome. Well, one more question on like initiatives. Like I read about this OP hack or OP hack initiative as well. Maybe you have other builders kind of programs as well. You want to elaborate a little bit on that? Like, what exactly are you doing? Like, what's the main goal of these programs?
Yeah, I mean, like one of the things that will certainly use some of this capital that we've raised is to help accelerate the innovations that happen in the Bitcoin ecosystem. So one of those things that we'll be doing is putting on these periodic hackathons. We're going to try to do it once per quarter. That's why this is delineated as OP Hack 001, because hopefully we can do this all throughout the year so that this becomes a forum for innovation and creativity. There's a lot of other hackathons in other ecosystems, and there's a whole bunch of just developers who focus on just hacking or hackathon building, right? These weekend or a couple of week MVPs that, quite frankly, are what Bitcoin needs right now. Like, there needs to be more fun and creative things to do in the Bitcoin ecosystem. There just hasn't been a lot of infrastructure or any type of SDKs or framework, open source, anything to really like allow for a developer to say, I can build something quite easily in a short amount of time and I can be recognized for that. There's a whole community of developers who do just that like throughout the year, right? They're just competing, trying to create something that sticks, and we want to see more of that in Bitcoin. We want to see more creativity and innovation, that whether it's built on Arch or somewhere else. Like, there's certainly tracks in the hackathon that are outside of Arch. There's utilizing the proto runes and Sandshrew indexer, like building a product around that. There's partnering with the Ords Games guys, who also did BitBoy, and they want to inspire game creators to build a game. So there's a track devoted to that. There's an open source and public good track that is really devoted for anybody who can bring a contribution to the Bitcoin space that is just net positive for everyone to use. Maybe it's not a business, but it's a tool or something that is needed, like a block explorer or some type of Oracle or something that is actually needed by the application builders or the community as a whole. So the whole theme of it is really to just inspire creativity and innovation so that we can accelerate this ecosystem that we're taking an initiative to try to make bigger. Like, scaling Bitcoin can mean multiple things, right? It can be, how can we make Bitcoin more scalable in the sense of transaction throughput and block size and all that, but it could also just mean, how do we make the ecosystem bigger? How do we make the price bigger? How do we make the community bigger? So that's kind of how we are utilizing the seed capital that we've raised to further our interest, as well as the Bitcoin ecosystem's interest in growing the pie, so to speak. So because we believe raising the tide raises all ships, right? So if we can help create a trust minimized bridge to Stacks or another layer 2, then maybe we can help that ecosystem grow to be bigger, and then that can ultimately make Bitcoin grow bigger. So we're here for the growth, and the hackathon is just one of the small ways that we're inspiring this. Which, by the way, submissions open in Nashville. It's all digital submissions. There will be an in-person element in Nashville if you're there. I don't know when this podcast drops or anything, but if it happens to drop before Nashville, we will be on site with all the various teams doing office hours and things of that nature to help you guys build if you're interested in building. Submissions will close August 13th. So there's like a 3 weeks worth of time window to get your submissions in. There's a lot of prizes, grant money, as well as investments at stake here. So there's going to be lots of VCs who are paying attention to the submissions because they all want to see what opportunities exist for them to get into some early stage deals. So if you're a developer, possibly even not even a developer, but you're a operator, someone that fancies himself as a marketer or something, like, you can partner with a developer and build a project together. That's literally how Amin and I met in the Bitcoin Startup Lab. Is we met in the accelerator. We decided that I was good at some things that he wasn't so good at, and vice versa. And we decided to join forces. So that's also something you can do if you're not necessarily a developer and you want to build a project in the Bitcoin ecosystem. You can join the Discord on Biddlebox, which is where we're hosting the hackathon, and you can introduce yourself to the community and see who's willing to work with you. So lots of opportunity to go around.
Nice, awesome, Matt. I think we've run over 50 minutes, which is generally when we round up the conversation. I've personally enjoyed it quite a bit. I think I share a lot of your views and the way you think about things. So definitely very excited to see Arch Network coming out pretty soon. So if you could just maybe share your roadmap real quick, like what's next, how can people get involved, if there is anything. You've already talked about the different opportunities for developers and hackers, but anything other than that you would like to cover, any wisdom you want to share, whatever, the floor is is open for you to take it
For
over.
sure. So in about a week and a half, 2 weeks time, we'll be officially opening the public testnet. So thus far, for the last 2.5 months, we've had a private beta testnet open for some developers who are looking to deploy quickly, and they've gotten a little bit of hand-holding help, and they've helped us refine our documentation for onboarding these developers. So now we're ready finally to open that to the public. Our validator Genesis set of nodes are all onboarded and in the ecosystem ready to validate smart contracts. So we have some of the best validators, commercial validators in the space, mostly from the Solana ecosystem, as well as just more like commercial validators that are much larger, that support 20, 30 plus chains. And then shortly followed after that will be mainnet launch. So I would say don't skip the testnet, because there's definitely going to be some points or incentives available to be earned both from the application developer and the user side. So definitely stay tuned for that. We'll be hopefully integrating with pStake here pretty soon, right? Doing some liquid staking on Arch. This is actually a pretty cool opportunity, because the yield that will come from the LST or the Arch staking is actually true Bitcoin native application or execution. Gas fees, right? It's not like we're taking this Bitcoin and securing Cosmos with it. We're not securing Aptos. We're not securing Solana. You're actually securing Bitcoin smart contracts. So if you're bullish on the idea that programmability is going to exist on Bitcoin, and that a verifier network is worthy of those rewards of securing the chain, which is the whole point of proof of stake, then I think that the yield is going to be quite attractive for anyone staking in the Arch network. So I think that that's going to be something that the pStake community can look forward to pretty soon as well. And I think that's about it for now.
Thank you so much,
Boom.
Matt. It was great having you.
Yeah.
Uh,
Thank
go
you
ahead,
so
Yamin.
much. I definitely stacked a lot of knowledge on this. I think viewers can even stack some alpha that you dropped in between the lines. Yeah, it was great having you on. Thank you so much, Matt, for joining today. And we'll make sure this episode airs before Nashville, so people can still get that alpha too, and go meet you guys there. We'll definitely meet you there as well. Looking forward to
Perfect. We're doing that big party with Magic Eden on Thursday night, the 25th, I think, at the Nashville Underground. 6-story venue, like 1,500 people, all you could drink. It's going to be a massive time. There's 2 mechanical bulls, so bull season officially in session. Bowling alleys and arcade, the whole gambit. So if you have the
Oh
chance
man,
to come,
that sounds bearish, Matt. Come on, if you have a bull like 2 bulls, that is bearish.
no. This only bull vibes at this time.
Only bull vibes. Amazing, man.
the event to be at. We'll definitely register.
Definitely.
See you guys there. Cool. Thank you so much.
Thanks for having me.
Bye, everyone.